Greetings, members, one and all of the Salivation Nation. The one-word answer as to why gold and silver dropped so much today. Let's explore! Explore is not the answer, by the way. It is actually the word confidence. That's right, and I'm telling you right out front before I get into the nuance of the video. Sometimes I'm criticized for not getting to the point, but nonetheless, there is a lot that is behind some of the movement in the precious metals. And today, it's about confidence, consumer confidence, which is a psychological reaction, which is something that does drive the markets a lot from day to day, and that's why I believe they are so volatile. But one thing we know that's for sure, and that is that, well, when gold and silver are unloved and they drop, in cases like today, it provides a good buying opportunity for those who have the means to do so and within your budget. We're going to take a look at a couple of different articles here to kind of see what some of these analysts are talking about and what the fundamentals are about some of the behind of the movement of the precious metals today. But you can see they took a pretty big hit. We'll revisit this page soon. From the technical side, gold and silver sink to a 2.5-month low as risk appetite is robust. From Jim Wyckoff, gold and silver prices are solidly lower on midday on U.S. trading Tuesday and fell to 2.5-month lows. The safe haven metals are being pressured by bearish near-term technical charts and not much risk aversion in the marketplace at present. August gold futures were last down $17.80 at $17.63. September COMEX silver was last down 36 cents at $25.89. The U.S. stock indexes are higher at midday, and the NASDAQ and S&P hit new record highs today. And so there you go. That's typically what happens when the stock markets go up. Well, typically precious metals suffer a bit, even if the dollar index is not as reaction, or it doesn't react as much. But it reacted today too. We'll get to that momentarily. The summertime doldrums have arrived early this year. It is just the beginning of summer, and I did post a video earlier about how silver could be in a summertime slump, and it appears to be this is happening right away pretty much here, but it's affecting gold too. The marketplace is generally quiet, has set aside inflation and potential pandemic resurgence concerns, with many traders seemingly more interested in family outings and vacations as Independence Day holiday approaches. And that's just it. We are all tired of really essentially the coronavirus, the markets. We want to get out and have fun and not have to worry about this stuff. So the consumer confidence is increased and many people are traveling and buying things. Many wonder if there will be a reckoning for the U.S. at some point down the road. Yes, especially those of us who hold precious metals, we know there will be. A Wall Street Journal story is entitled "Americans Are Buying, Buoyed by Savings and Federal Stimulus During the Pandemic." And a gusher of money is spilling out from the U.S. economy, according to that piece, and rippling around the world, driving the global recovery to an extent it hasn't in decades and giving confidence to businesses to invest in meeting the huge American demand. Now, in Economics 101, there is no free lunch, and we know what happens when all this money is printed. It's diluting the monetary supply and diluting the value of our dollars. Hence inflation. That many veteran market watchers are now asking the question, how and when will Americans pay the piper? The answer to the problematic price inflation down the road. And even though many aren't going to the hyperinflation word, sustained and longer than or sustained transitory inflation may be a safe word to use. It'll be a sustained transitory. In other words, it may be temporary, but it's going to last longer than many people think. And so we'll see how that plays out here. The key outside markets today see the U.S. dollar index higher. NYMEX crude oil futures are firmer and trading around $73.30 a barrel. Some say that it could hit $100 a barrel soon. And so we'll see there. Traders are awaiting Friday's morning's employment situation report for June from the Labor Department, arguably the most important U.S. economic data point this of the month. The key non-farm payroll number is forecast to come in at 700,000 compared to a rise of 559,000 in May. The unemployment rate is seen at 5.6% versus 5.8% in May. And people are slow to get back to work because of the stymie from the federal government. Some states are ending that. Sooner or later, that's going to mean that people are going to be coming back to work, and businesses are desperate for them in order for them to keep afloat. So we'll see here how this all plays out. So that's that piece. Now let's look at another piece from Anna Globova from Kitco as well. Gold prices were trading sharply lower after the U.S. Consumer Confidence Index came in at better than expected in June. American Consumer Confidence Index rose to 127.3 in June from May's upward revised reading of 120, the U.S. Conference Board reported on Tuesday. Economists were expected to see the index at a reading of 119. So it's much stronger, and I didn't know there was numbers that actually measured that, but this does really kind of make sense. And then we saw gold prices, they tumbled down to 2.5-month low before the data was released amid a stronger U.S. dollar. Gold remained under pressure following June's consumer confidence number, with August COMEX gold futures last down more than 1.4% on the day and trading at $1,754.30. So these are what is known as, these numbers that are affecting it are known as natural market forces at play. Other commodities, I'm sure, were hit as well. And so these are the things to be expected through June. We'll see what the third quarter leads to in terms of the prices for gold and silver. Many of us feel they're going to go up, and that might be the time where my predictions may come to reality. Tuesday morning gold was primarily being pushed down by gains in the U.S. dollar index, bearish near-term technical charts, and a lack of risk aversion in the marketplace from Jim Wyckoff, which we saw that piece before. Present Situation Index, which describes consumer views on current business and labor market conditions, advanced to 157.7 from 148.7. The Expectations Index also rose. So it seems like there's a measure for everything out there. The psychological impact, even it has numbers that can measure that yield. So we'll see. You don't see this too often, though, talked about. Consumers' assessment of current conditions improved again, suggesting economic growth has strengthened further in the second quarter. So we'll see how this reads out in the third quarter. It'll be very, very interesting to see if we do see this momentum continue to grow. Who knows? We may not see these big increases in the third quarter. I think a lot of people are so ready to get back to normal that my guess is we still may see some economic growth ahead no matter what is being proposed. And maybe by then, some of these stymies from the government will ease up a bit and people getting back to work, and economic progress will turn on. The gears of economic progress will turn on. We'll see here as this graphic shows here. So the short-term outlook on jobs was mixed. We'll find out Friday what those numbers will be. And, it's amazing how much or little information can have this huge impact on gold and silver prices. But right now, they are suffering a bit. If this continues to be a trend each day, where this continued fall or staying kind of where it is, this is the sign of that doldrums of summer continuing. As of the recording of this video, gold is down almost a full percentage point. It's down $17 to $1,762, and I think there's some resistance probably at $1,750. Silver has fallen well below $26, over almost a 1.33% climb. 1.28%, down 34 cents to $25.85 for the ask price. Platinum took the biggest hit of all the metals, down over 2%, down 23 bucks, $1,073 now for platinum. Palladium took the very slight hit. It's hanging in there. $2,763 for palladium. Rhodium actually went up, surprisingly enough, almost 4.5%, up $800, now above $20,000. The gold to silver ratio remains kind of stuck in this position above 68. Now there it is. There's your news for the day. So that confidence is where it's at. Now, confidence being one of those words that is apparently with consumers is measured at a scale, well, that could be transitory too. One thing that we know for sure is transitory is the dollar. Sooner or later, its transition is going to just be devalued further and further and further down the road. And so until then, we will continue to hold these dollars, smell them, and use them for our transactions day to day. But, I believe in the safety of precious metals as a way to protect yourself against a greater inflating dollar, and that is to be able to preserve your wealth with them. And so I see these dips as a buying opportunity, and it does not certainly affect my confidence in the metals. And that's what it's about, folks. They can't measure that. They don't care what I think. They don't care what you think. One thing's for sure, no matter what the price does, my confidence in the precious metals as the most stable version of money out there has not waned and shall not wane. Let me know your thoughts in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.